everybody else that wants to. So I'm very, very excited to be here and share with you guys this amazing deal. And most people wouldn't really necessarily know that I don't share my deals. Like usually all the deals that I invest in, I just do it myself. But Jason and Peely are really good friends of mine. I'm actually moving to be 6 minutes away from them, a 6 minute drive. It's just really cool. And this deal that we have right now that we're going to be presenting, it's in this exact same area. So number one, I'm moving there to live there, so I like it well enough, as well as Jason and Peely there. And they also, on top of this deal that we're taking down now, this terrific deal that we're looking at, they have many, many of other apartment complexes in the same area. So economies of scale are fantastic. They manage their properties really, really well. I actually, 2 months ago, got to drive through and see with Jason a lot of his properties. And so when this deal came to me, when Peely asked me and said, "Hey, we'd like you to be a part of it," I said, "Let me look at it." And then after seeing so many great things about it, and plus loving Jason and Peely, it's like it's absolutely no brainer for me to do it. And then I said, you know what? Let me go ahead and open it up to people that would also want to be a part of it as well. So I want to jump right in and let you, Jason and Peely, share. So Jason and Peely, go ahead and as soon as you want to go ahead and get started. But Jason and Peely, really good friends of mine, spoke at Rubicon 3 times now. They're fantastic multifamily investors. So super excited to have you guys share about this deal, guys.
Absolutely. So thank you so much for having us. Dustin, I assume most are going to know you on this. So do you want to do a quick introduction about yourself before we jump in?
About me? Absolutely. So yeah, so I am a real estate investor, started in 2006, started buying property after property, residential 4 units and below, and eventually had enough properties, 30 plus properties, that I said, I'm not going to work anymore because I don't need to. And then I personally love residential properties and then also love playing Monopoly. And in the game of Monopoly, you try to scale up and then eventually you get into multifamily or hotels. And so that's what I've decided to do on top of teaching other people to invest in real estate. Because there are so many great ways to invest in real estate to make money, to be financially independent, financially secure in your life, and take care of your family. And so there are so many great ways. Now, my bread and butter is residential. Now, Jason and Peely, their bread and butter is multifamily. And so they are phenomenal at it. That's why I wanted to be on board with them. So with Master Passive Income, my company that I started where I coach and teach people how to invest in real estate, I've been blessed to meet so many great people like Jason and Peely, who were all real estate investors, and they're all great ways to invest. There's no one way that's better than the other. I personally love all types of investing because we can all make money as long as we're around the right people. And so I have the right people personally. I believe Jason and Peely and the people around them are the absolute right people that I would want to invest in. So I'm personally investing my money in this deal and then opening up to everybody else.
Fantastic. Fantastic. I'm Jason Urisi. This is my wife, Peely Urisi. Would you like to give an introduction on our company and who we are?
Fantastic. So we created Urisi Holdings back in 2013. Like Dustin, we actually started in the residential space. I became a real estate agent. We got into flipping, wholesaling, small multis, and then we jumped into large multifamily back in the beginning of 2017 in Kentucky. And since then, we have amplified and built our business, Urisi Holdings, to where it is today. It's really amazing to meet you all, and thank you for coming on for our presentation.
So since 2016, when we transitioned to multifamily, we've acquired over 32 properties now. It's a little over 3,000 units in 7 states in totality, with the majority of it being Middle Tennessee. Since that time, of the projects we've done, we've gone full cycle, meaning that we've purchased the property, done the repositioning, and sold the property for 14 of them, with the 15th and 16th happening in the next 3 months here. Very excited about this project here. It speaks to our core business principles. It's our bread and butter. It's right here, as Dustin said, in our backyard. It's where we already own and manage 500 units. So I'm going to jump in here. I'm going to share, make sure I have sharing access onto this here, and we will get started. All right, so property we are here today is the Cove. The Cove is 355 units. It's here in Murfreesboro, Tennessee. It's spread across 4 properties. However, those 4 properties are contiguous, right back to back across the properties right next to Middle Tennessee State University here in Murfreesboro, Tennessee. So a little bit about Murfreesboro, Tennessee. You may not have heard of this city before, but it has had a tremendous run in the last decade in terms of growth. It currently, in the last 2 years, has been the number 3 and number 16th fastest growing city in the nation. Most of the other cities you see on there are Florida, Texas oriented here, some out west, but you have Murfreesboro, Tennessee. A lot of factions for that. It used to be the capital of Tennessee. And for that, the roadways, the infrastructure was all built to a line where pretty much you have a hard time getting through Middle Tennessee without coming across Murfreesboro. Well, that's played a big role in a lot of other major employers also coming here as well. So we have everything from major medical to, of course, MTSU, which I said is the second biggest university in the state. We have a major Nissan facility, a lot of back end on warehouse. We also have major FedEx. So there's a lot of major employers that continue to pull people here to this city. Last year was actually the biggest year on record where, in terms of sale growth, in terms of volume for houses, it historically in the past had at max 15 houses sell over $1 million. They had over 60 last year. Ton of energy, ton of people coming into this market. And on the other side of it, we have a massive difference between supply and demand. We are in a big run where we need housing in a lot of different markets, and the same is true for Murfreesboro, Tennessee. One of the major factions here, though, is because of the major growth that's happened in Murfreesboro, Tennessee, we've outbuilt the infrastructure. So the sewer system itself is at capacity, so they are not allowing units to be built to meet the demand. And if they are being able to be built, it's very much harder for them to come out of the ground. And the density that will allow them to be built is about 60% of what the market would be if we didn't have this sewer capacity. So the city itself is working to fix this issue, but with anything of trying to keep up with the growth still happening, it's a hard run for them to meet those needs. And so it's going to be years to come. So this property, again, is 355 units. Some of the parts, let me move ourselves here. So it's 355 units. Again, community is 3 miles from our headquarters. One of our other partners, Chad King here, is a Titan Capital Group. There you go. We can move that around. They split the office with us, and they manage the properties here also with us in Murfreesboro, Tennessee. This opportunity is being brought to us by a seller who purchased these properties between 2012, 2013, and 2014. Again, I said it was 4 assets. They've had this property and they've been managing this property from out of market. They've been managing this property from Knoxville, Tennessee. And although it's still here in Tennessee, it's about 3.5 hours away. So they have not had their finger on the pulse. And what that is allowed for the property to really not meet its income goals and not to really obtain operational efficiency across the property. So that said, we have an easy option to come in here and just improve operations. That simple. But what's really made this a stellar opportunity is this same seller, they have a development project in Chattanooga, and that development project has fallen behind compared to what their expectations were when they took it on. So they have to do a refinance coming up in the middle of the year, so late summer here, where it's going to require substantial cash in to the property. And they are having to sell properties like this to be able to come up with the cash they will need to be able to meet that closing. So what does that mean? Well, we have a number of other properties in this market, as we've mentioned, and those properties have gone out and appraised at valuations anywhere between $145,000 a unit to $165,000 a unit. We are buying this property, which in many cases is newer vintage of some of those other properties, and in many cases has very similar layouts to those other properties, for just over $90,000 a unit. So the total purchase price is $32 million. Why are we getting such a discount? Well, as we spoke about, they bought this property over 10 years ago. They have a very low basis on this property. So there's a large amount of cash they'll be able to pull from this property when they sell it, even at this purchase price. And because of their time crunch, they don't have the time nor the ability to go out to market and openly market it. Today, if this property was openly marketed compared where it stands today, they would probably be able to sell this for somewheres of a 30% premium compared to what we're actually getting it for. So we're very excited about the opportunity walking in. Let me see if this will allow us to go somewhere. All right. So as mentioned, $90,000 per unit is where we are buying this. Distressed seller based on the reasons I just talked about. We are not underwriting to rent increases, and we're underwriting to an exit sale price below our current comps in the market. We've stress tested this in a number of different ways. We see a lot of room that we could improve this property, one, on maintaining operations the way they are and just increasing income or adding on other income drivers, two, not increasing the income at all and just improving the operations and going and getting the economies of scale compared to the other options right there, or three, just maintaining it as it is. We can still have a very viable product. Again, that's us stress testing it. We have a core business plan we've now accomplished in a number of other properties in this market. We will do that same property here as well. This is a stabilized asset. We have operational efficiency. Our management company that we are going to use in this town is called MMC. They currently manage just shy of 4,000 units, over 3,500 units. But what makes them stand out is that the units they manage are right here, not only in Murfreesboro, but the county. So where the current seller manages from Knoxville, they do not have their finger on the pulse. Our management company not only manages the majority of our portfolio, but also manages a ton of other properties in this market. So they know exactly where this property will rent at. They know exactly what the operational costs are. And more importantly, because of the volume they have, they get the best pricing for their turns. They get the best pricing for their contracts because they bring such volume to their market, to the market, right, to the vendors that they serve right there. So we will be able to garner a very high amount of operational efficiency. I want to talk to the 506C.
Oh, perfect. So this is a 506C offering, meaning we can, 506C means we can put it out to everyone. Are we doing the 506C now?
Yes.
Fantastic. We can put it out to everyone. We can market, but you need to be accredited for this particular deal. Our minimum investment is going to be $50,000. PPM is going to be available or has been available since the 15th. The PPM needs to be signed by the 31st. Funding deadline is the 10th, and the closing date will be the 20th.
So again, this is a 506C. It's a offering for accredited investors. And so accredited investors is someone who either, a few of the linchpins that you will have as part of being accredited is that you will have made $200,000 or more the last 2 years as an individual, or $300,000 a year for the last 2 years as a married couple. You could also have a net worth of more than $1 million, not including your home. As a business, you could have a business with more than $5 million of assets. So there's a couple thresholds which could deem you as accredited. So if you are not sure if you are accredited or not, talk to Dustin, have a conversation with us. We're able to help you go speak with your accountant, speak with your certified financial advisor, or use some sites to determine if you are. This does have a quick turnaround. So why does it have a quick turnaround? Well, we talked to this earlier, is that there is a time capacity with the seller needing to sell this property to be able to get the funds to be able to do this cash in refinance. So although we are getting a great opportunity, the turnaround time is very quick. So we are looking to get questions. So if you have any questions, in the meantime, feel free to reach out to Dustin and team. We'll be able to get back to you quickly to make sure you're clearly in the know on what this property does. So the investment highlights for this property. I'm going to start on the right side. This is an 80-20 split with an 8% preferred return. Well, what does that mean? So of the cash flow that comes to this property, each year we will have a threshold where, based on your investment, we will have to return up to 8%. So if you, easy math, invest $100,000 each year, our target return for you is 8% at minimum. So 8%, $8,000 on your $100,000, and that will be paid out quarterly. If we meet that threshold and we outperform that, then there will be a 20% promote that will go to us as the partners, and then 80% to you as the limited partner. We are putting on debt from a Fannie Mae loan. That debt has a loan to value of 75%. So the purchase price is $32 million. We will have a $24 million loan. Our target interest rate is based on the Treasury. Based on today, that interest rate is 6.18%. So based on the market, very good. We have 4 years. Although it's a 7-year term loan, 4 of those years will be interest only, meaning that after year 4, we will go to amortizing to the end of year 7. Our hold period is targeted anywhere between a 5 and 7 year window. Although, as we touched on prior, we have turned a number of properties, it will be 16 now, where we have sold them. We have sold them anywhere between month 13 and year 4. So why would we do that if we have a 5-year horizon? Is that if we get ahead of the business plan. And maybe we're at our business plan where we intended in year 5 and year 2 or year 3, or the market has really come behind us, we will look to see if we can get you the best returns today compared to waiting it out that part. Now, our yield projection, this is based on a $100,000 investment, is that we target an equity multiple of 2.23 is our target, meaning that if you invest $100,000 over the course of the 7 years, is that we will return you $223,000. That will include your original principal. And then that will be on top of that, the cash flow that comes out each year, along with the profit at sale. That will average out to a target of 17.61% average annual return. Now, the cash on cash target is 8%, but the average annual return includes the profit of the sale. And our internal rate of return based on the return of money timeline is 14.49% as a target. Purchase price, $32 million. Capital improvement budget, meaning our construction budget, is just shy of $1.9 million for, with that and closing costs and fees, operational expenses, it comes to a total capitalization of just over $35.5 million. This is across 355 units. They are built 1973, 1995, and 2000. Current occupancy is 94%. And it just shows that right now, today, our portfolio is 95% or greater on the occupancy, our existing portfolio, and we are charging higher rents based on the market. This property is charging lower rents because they do not have their finger on the pulse and they're only achieving a 94% marker on their occupancy. So it just shows the ability we have for this property to go in there and just improve it very simply by just matching what the market extends to us. Again, this is a 506C opportunity, 7-year hold, as we reiterated, with an 8% preferred return and an 80-20 split to partners. So just want to show a little bit here. If you see in the top, that's Titan Capital Group. That's one of our partners. That's Chad King and the Kings, Yarusi Holdings. We are on the left side. You could see that we both tied to the same office building here in Murfreesboro, Tennessee. As you look around, these are, the Cove is on the top right there. You can see the duration of where we are. That's the property we are buying. Current properties we now have within our portfolio we're operating. The Cottages of Bear Branch, 64 units. The Dempsey, 101 units. Stonehouse, 44 units. The 902, 93 units. That was our first property we brought here in Murfreesboro, Tennessee. And one of the main reasons that we decided to actually move here is because this was the first property we purchased here with the same team. That was back in 2020. We purchased that property, 93 units. We turned, meaning that we renovated 91 of the 93 units in 1 year. We improved the property, doubled the NOI, and purchased that property for just comparable to the per unit price we're buying this property for. And that property just in July appraised out at just about double of where we purchased it. So it appraised out just over $16 million, and we purchased it for $8.9 million. The Metro Apartments on the left right here has 32 units. And then the Dustin Apartments up on the top left that's being rebranded currently and is being repositioned as 125 units here in Murfreesboro, Tennessee. This looks a little bit to the returns here. If you see in the bottom, it shows you the whole period based on the returns. So right now, based on the anticipated 7-year hold, our target returns would be a 14.49 IRR. Equity multiple of 2.3 million. However, if the opportunity was served based on the same returns to sell in year 5, we would still have a very healthy return of just shy of a 2x multiple and a 16.2 IRR. This shows on the top right here, the hypothetical $1 million investment. This would show your cash flow of what you would look at. So year 1 is we're making these improvements and improving the property. The target cash on cash return would be 4.8%. And then you will see 8.8%, 8.8%, and 9.6% for the years 2, 3, and 4. You do see a dip in year 5 and year 6. Well, this is because the loan moves from interest only to amortizing. So although the cash flow does reduce within these years as the target, you now have the other silent, awesome, great thing of multifamily assets is we start paying down the principal. So it starts to help on the profit on the back end. So your return on the bottom left, hypothetical $1 million investment, you invest $1 million. Total returns over the course of the 7 years will be $2.232 million, which is an investor profit of $1.23 million. These are some of the comparables, and so it may be a bit small on your screen there. The main thing to note here is that if you look on the bottom of each, you see the shaded portions right there. Those shaded portions are the current assets or current units here at the Cove. They are all, as mentioned, below market on the rent. And if you look right now, you'll start to see Northfield Commons, Ashwood Cove, Colony House. Those are properties that are managed by our property manager. So we have a lot of properties that are within our portfolio that are either our properties or are managed by our property management that are achieving the market rents. So this is based on one bedrooms. You'll see this sales comps as we look in here. The City Edge Flats, 83 units, 163 a unit. Easton Place, 217 a unit. Redwood Park, 171 a unit. The Southern, 168 a unit. All comparable properties here. This is the Cove, as you see in the picture on the right. All of these properties are similar vintage. There's a few here that are slightly newer, just to 2002. But if you look at the per unit and just the sales price overall, it speaks to the value we're getting on this opportunity here and why we're very excited about it. Again, this just looks at some more of the sales comps as it goes through right here. Everything Crossings, the overall Creek Apartments. I mean, some of these are newer vintage, but if you look throughout that one page beforehand spoke more to the area. But if you look at just some of the opportunities for sale potential, it again trends to what we can do. Now, for our sale on a per unit basis, we're only modeling this out to sell this at 130 a unit. So that's what we feel is a very conservative expectation for a sale price compared to these. But if we can meet that and exceed that, the opportunity for an additional returns skyrockets from there. These are the 4 properties tied together here. In between is one property. But if you see that the bottom right is the actual Cove properties, then we have the Oakland properties up here to the middle and left. There is a community pool, community clubhouse, multiple laundry facilities, a sportsplex, multiple dog parks, grilling, and pergolas. So the properties themselves showcase well. It just simply comes down to operations. And so we'll walk in there with a professional team. We will start day one by setting expectations, putting in the proper tenant base, setting the narrative for what will happen on the income, and to start to put in the proper team to moderate the expenses to really set the narrative going forward. These are some of the layouts. The nice thing here is this complements our current portfolio where we now are starting to have a unit type to meet every tenant need. So here at the Cove, it has everything from 2 bedrooms, 1 bedroom studio. So we have a full blend of mix here. And for our renovation package, we will go in there and renovate these units solely to a classic nature to get this market rent. So we do not have to go in here and do a premium upgrade. This will not be needed to meet the demographic and meet the need for where the income will go for what the market rent will be. So it's very simple. We expect our turn costs to be anywhere between $7,500 to $9,000 a unit at the max. The majority of our exterior work will be targeted at the 1973 building that needs new roofs and also needs new siding. Again, the approach here will be manage this property better, improve the operations, moderate any expenses, capitalize on the additional income levels that can be achieved. That's going to set a very big trend across this property to allow us to improve it to match the market. This just shows some of the interior. Very basic layouts, very simple turns. It's our bread and butter. We'll be able to replicate this in a good way. We will go, we've changed the paint scheme to go in there, agreeable gray with a white trim across. So we'll start to change our paint scheme just to match our existing portfolio. But again, we will continue to push with either LVP or tile within the kitchen in common ways and keep with carpet in the bedroom. The unit upgrades for vanities, for kitchens, and for appliances will be met as we come across units that are needed, with a lot of this targeted at the 1973 building. This overall underwriting gross potential rent across the portfolio, $3.9 million. We are doing about a 10% jump in year one. And that serves where really the target base right now is about $150 to $200 on the market. We anticipate to have about 12 to 15 units a month that we will turn, with a goal of touching about 50% of those units over the course of the first 12 to 18 months. Big part here is that we will also do a cost seg study. That cost segregation study within itself, that allows us to do a financial engineering study. There are many bonuses to multifamily investing. You have the opportunity to have the cash flow, to have the appreciation that we'll get from the market, and also the forced appreciation from our improvements and the tax advantages. And another one is depreciation. What we do here is that we do a financial engineering study called cost segregation. That goes in and puts components into basically 5 and 15-year categories. Your carpet doesn't last for 15 years, doesn't last for 27 and a half years. So what the study allows you to do, it allows you to push forward the useful life of these components. And instead of having depreciation streamlined as an average year on year for 27 and a half years, you can put this into accelerated buckets. So we will take the lion's share of our depreciation as bonuses throughout the first 5 years here. And what this does is it allows you to have paper losses, although we're giving you distributions that may be able to help you offset some of your tax hits or some of your capital gains from some of your other investments out there. So it's a very lucrative strategy to help you to offset some of your gains potentially if you can use that. This is our property management company. It's founded in 1988, manages over 3,800 units, has about 80 employees currently. 480 units of ours are managed by them currently. Great in-depth team, are truly top-notch in many markets. We have property managers that are about an 8 out of 10. For what we can find in the market, they're about a 12 out of 10. So top in line. We're very excited to work with them, can continue our relationship there with them in this market. This is the investment disclaimer. Again, this is not a guarantee of returns. This is an offering discussed in the information here is that this is our prospectus on what we intend for this property to be. But please read through this investment disclaimer to make sure that you understand all of the return opportunities, but also the risks that come in the nature of any investment, including this one. So that's where I'll leave it right here. Dustin, I will allow you to jump in. If you are having any questions, make sure you reach out to Dustin, reach out to the team here. We'll be able to get back to you and talk to you on any of those questions that may be just about the property itself, or even in terms of your investment nature. Dustin, I'm sure you have a way that everyone can reach out to you to connect with you from there. Stop the share right there.
Yeah, I sure do. So anybody have any questions right now while we still have Jason and Keely on with us?
I had a quick question. Hey,
Hi,
Jason.
Michael.
Hey, Keely. How are you guys?
Michael.
Of the different deals that you've done in the past, obviously you've taken down some other, great apartments in the area. With this one, obviously it looks like you're getting in with a nice distress, sale from the seller, and you're getting this pretty much equity up front, right? I'm just curious, how does that look like compared to the other deals you've done in the past? And were you able to get in, with as much, or is this one kind of like on the higher side? Is it on the smaller side? Like, how does that relate to like the other ones that you've done in the past?
This, we are getting in a substantial value compared to what we typically get into. And so we'll say that we're getting into valuations we haven't seen since 2019 and 2020. And a lot of that just speaks to where the market is transitioned back to, and also the lending environment out there. And lastly, just their need to sell the property. So the property I touched on, the 902 was the 93 units, the first property we brought in Murfreesboro. We're buying this at a favorable discount that matches to what we brought that at. The difference is that property was built in 1966. These properties are 1973, but also 1992 and 2000. So much newer in terms of the properties themselves. So we feel we are walking in day one to a ton of upside just on the value. And we have the ability to really go out there and push this to match where the market is.
Cool. I appreciate that. Thanks.
Absolutely. Great question.
TJ, Tom, do you guys have any questions?
Hey, Jason, I just had one question. Looking at that, good to meet you. And
Hey, Tom.
Evictions. I was curious what, how the turnover rate is both at the Cove and properties, but also maybe at the other properties you have in the area, how that area is doing.
So evictions themselves are very easy. Middle Tennessee, and of course, is a very landlord-friendly market. So if there is a need to go forward and file on a tenant, it's anywhere between a 25 and a 45-day process, so very quick. Usually when you take on properties, you are taking on some problems that will come from prior ownership, and we've seen that throughout. The one we touched on just right prior, based on the question from Michael, the 902, we had to transition that entire property. That property was the bad apple in the market, so we had to evict a tremendous amount of people. And it took us, when we first took that property on, we would get 30 to 35 calls to one qualified tenant. And it took us, now we're about 4 to 1, sometimes 3 to 1, depending on where we are. So we had to do a change of the entire landscape. But the positive thing is, like, that was the bad building on the block, right? And for us, we had to change the narrative to meet the rest of the market. The Cove itself, it has some tenants that are falling behind, some tenants that will evict right in there, but the nature of this building is nowhere compared to what the 902 is. It does not have a crime problem. It does not have anything of a problem. Most of the people live in there, warehouse, there's some medical students, there's some grad students in there, there's office workers, there's teachers, right? So it just comes down to the nature to some people just, lose your job or have life moments. So evictions can and will happen, but it's not a systemic problem that's happening across that property. It just basically speaks to what happens in the market. So we intend that, usually when you take it over, you will find some hair on the property that we'll deal with, just like we've dealt with on other ones.
Got it. Thanks.
Any other questions?
TJ, do you have any?
No, I didn't. I think Jason and Peely did a great job of putting together the documents and kind of walking us through them. It's very, very informative. It looks like a great opportunity.
Thank you.
Well, and like I said at the beginning, I usually don't share out any deals that I do. And this one came up and I saw it being such a tremendous deal. And Jason and Peter are good friends of mine. And if you look at on the map, it's actually, the Cove is really close to where I'm moving to. I think relatively in the same general area. It's a great area. I'm definitely a big believer. I actually stayed at Jason and Peely's house for, I don't know, was it 3 or 4 days, just driving all around Murfreesboro. And but this deal is to me, I mean, I don't invest in very many syndications or any multifamily, and it's until I found a really good one. And just like in every market, people might be thinking, okay, what's going to happen with inflation and interest rates or whatever? We always know things are going to change. We don't know if it's up or down. Who knows? It might just take off all over again. But every single time like right now or 10 years from now, there's always going to be good deals. For me, I see this as being a really terrific deal because of the cost basis that we're going to be buying it. So that's why I really love it. On top of everything that Jason and Peely bring to the table with managing it and making sure that our expenses are really, really low, and to also make these properties perform better. So I'm super pumped, but definitely I will email everybody the recording this in case you want to watch it again, but then we'll definitely keep in touch and chat more about getting you guys, if you guys would like to be a part of this great investment.
I'll leave you with one little more factor about Murfreesboro, Tennessee. The size of it will surprise you. There's 165,000 people in the city. It has 7 zip codes, and it's on pace by 2035 to have 250,000 people in the city. So the growth here is tremendous. When we first moved here, the 902 was actually 25 minutes across town from us. And so just to see the size and just the growth of it. I mean, we have what are some of the new businesses moving in?
Oh, geez.
You will see a lot of
so many.
the usual suspects that you want to
Like
expect
Amazon
in the
and-
Murfreesboro, Tennessee, coming here on across the board. So you will see a big part. But we are very excited about it. Very excited to have Dustin move here, him and his family, and appreciate you taking the time to join us today.
All right, guys, thank you so much, and I'll be in touch, and we can chat some more about getting you guys invested if that's what you want to do. Thanks,
you.
Jason and Peely.
Thank you.
Thank you.
Grateful.